The struggle between governments and the rapidly evolving world of cryptocurrencies is shaping the future landscape of global finance. Unlike traditional currencies, cryptocurrencies operate on decentralized networks, blockchains, that disregard borders and sidestep many existing regulatory systems. This fundamental difference creates tension, as governments strive to assert control and preserve public interests while facing technological movements built specifically for autonomy. Scene 1. The surge of decentralization. It begins with the global rise of Bitcoin and Ethereum, which ignite a movement promising peer-to-peer transactions, privacy, and financial inclusion. Citizens in countries with weak economies, Argentina, Nigeria, Lebanon, embrace crypto, seeking refuge from inflation and restrictions. As the user bases swell, governments notice funds flowing beyond their oversight. Scene 2. Policymakers awaken. Capitals from Washington to New Delhi convene hurried policy meetings. Legislators debate, should cryptocurrencies be banned, regulated as securities, or taxed as commodities? Opponents cite financial stability concerns, crypto's volatility, its use for money laundering, and threat to national currencies. Proponents argue for innovation, digital competitiveness, and the rights of individuals to control their assets. Scene 3. Legislation and pushback. Countries respond with a patchwork of policies. China bans crypto trading and mining, championing its own central bank digital currency, CBDC. India contemplates a sweeping ban, while simultaneously launching committee after committee to study regulatory options. The European Union crafts the markets in crypto assets regulation, balancing freedom with investor protection. Meanwhile, US agencies compete. The SEC calls some tokens securities, the CFTC names others as commodities, and the IRS seeks tax transparency. Scene 4. New frontiers of regulation. Innovators, undeterred, pivot towards decentralized finance, DeFi, non-custodial wallets, and Web3 applications. Smart contracts replace intermediaries, and illicit activity evolves in tandem with enforcement. Governments feel two anxieties: loss of monetary control and diminished ability to police tax evasion. To cope, they enhance blockchain analytics and try to corral activity through exchanges and stablecoin issuers. But for every closed door, a disintermediated window opens elsewhere in cyberspace. Scene 5. The People's Dilemma. For ordinary users and small investors, the landscape is fraught with promise and peril. Crypto offers protection from capital controls, fast cross-border remittances, and speculative profit. Yet regulatory chaos risks confusion, fraud, and asset freezes. Some migrate to privacy coins and peer-to-peer protocols. Others demand clear rules and government-backed innovation, wary of both black markets and state monoliths. Scene 6. Toward a synthesis. The ultimate outcome is uncertain. Some jurisdictions veer toward strict control. Others innovate in partnership with public blockchains, attracting capital and talent.